Hi, I'm Harper Jones with Life with Leverage. We coach people on the infinite banking concept and how you can become your own banker. Today we're going to talk about traditional banking versus infinite banking. One of the main things in traditional banking is any of the growth on your cash is going to be taxed or taxable. And in infinite banking, all the growth on your cash will be able to compound tax-free, really tax-deferred but tax-free if handled properly. And then the death benefit later on in life will be able to pass income tax-free also if structured the right way. Now, in traditional banking, the compounding of your cash would be interrupted. And how would it be interrupted? That would be by taxes or by you actually withdrawing money out of the account and then go putting that in investment or spending the money elsewhere. In infinite banking, the growth will not be interrupted by taxes because it'll be able to be tax-free if handled properly. And then also you can leverage against it by borrowing versus withdrawing the cash and having two assets instead of one and put $2 to work instead of just $1. Now, in the banking world, traditional banking world, bank makes the rules. You've seen the loan documents and how they handle those documents and how much control they ultimately have if you read through it. And also even in the bank accounts, they're really controlling how much interest you get or don't get. And when you're wanting to borrow against it, they're going to charge you a higher rate and so on and so forth. In the infinite banking world, you're going to have a lot of contractual guarantees in the contract, contractual way to borrow against the cash in there at say 4 or 5% interest, when right now the market interest rate is 7 or 8 in the winter of 2024. And the documents that you have are going to be much more in your favor. Now, in traditional banking world, there's going to be a markup of interest rate. Why is this? Well, banks got a profit, and they're going to have middlemen that need a profit, shareholders, right? So you as a customer might get 3 or 4%, say in a money market. They might pay you 7 or 8%, charge you 7 or 8% when they're loaning the funds out. And that difference is the profit that they're targeting to make. And then they're going to have some overhead and then have a little sliver they'll profit and compound over time. Great, right? Markup on interest rate. In the infinite banking world, the insurance companies don't have a middleman if we're using a mutual insurance company. So you might be getting 4-5% growth on your policy, right? But then they're going to be charging you maybe 4 to low 5% to borrow. So it's much more preferred than say in the traditional banking manner. And you're able to get about 95% loan to value when you do borrow. And you have much more contractual rights and no markup on that interest rate. Now, creditor protection. Let's say, for example, you have a lot of money in a bank, it's exposed to creditors, but when it's in a life insurance contract, which can be varied a little bit state by state, but primarily you're going to have very strong creditor protection. So if you're sued or something like that, it'd be much harder to access, for example. Now, no death benefit. Obviously, in traditional banking, there's no death benefit with that. You could get a term, but that would cost you, be for a short period. And then later on in life, if you wanted to maintain that insurance coverage, you would either be uninsurable or it would be too expensive. Then let's pivot to infinite banking. You're going to have a death benefit with this whole system. And that death benefit will just grow and compound over time. And then later on in life, it would be used to go to the next generation, income tax free, given to a charity, so on and so forth. Now, last thing is guarantees. You're going to have some guarantees at the bank potentially, but in the life insurance world, you're going to have stronger guarantees over a longer time horizon with companies that have been around over 100 years, so you can safely rely and have a peace of mind. So this video is about comparing traditional banking versus infinite banking. If you want to learn more, want to get some policies set up, which we do for you, and we coach you on the concept of infinite banking, reach out to us. You could go to lifewithleverage.com or you could email me at harper@lifewithleverage.com. Looking forward to hearing from you.